Bitcoin plummets after record high. Market braces for volatility. Bitcoin has experienced a sharp price correction, falling back to $93,000 after briefly surging above $125,000 last month. This rapid decline has sparked concerns of a broader market downturn, echoing historical patterns where Bitcoin has lost up to 75% of its value following peak highs. The current pullback represents a 25% decrease over the last 6 weeks, intensifying uncertainty among investors. Market forces at play. The recent volatility stems from a confluence of factors. Profit-taking by investors, coupled with adjustments in market exposure, has contributed to the sell-off. This correction is not isolated to Bitcoin. Other major cryptocurrencies, including Ethereum, ETH, and Solana Sol, have also suffered significant losses, with declines exceeding 30% since the start of October. The overall crypto market has shed over $1 trillion in value during this period, marking the steepest drop in its history over that timeframe. Trump's policies trigger flash crash. The initial surge in price was partially fueled by Donald Trump's victory in the U.S. elections and his promise of favorable crypto regulation. However, subsequent policy decisions, particularly the imposition of 100% tariffs on Chinese imports, triggered a historic liquidation event. Within hours, $500 billion was wiped from the market, impacting over 1.6 million traders. Even Trump's own meme coin plummeted to 10% of its peak value. Despite later backtracking on the tariffs, the market has yet to recover. Potential for recovery: a Santa rally. Despite the downturn, some analysts believe the correction presents a buying opportunity. Nigel Green, CEO of De Beer Group, argues that lower prices, stronger hands, and continued adoption create a compelling scenario for short-term gains. Historically, major corrections have paved the way for substantial upside for patient investors. Key catalysts to watch: several upcoming events could influence Bitcoin's trajectory. The proposed tariff dividend. A potential $2,000 payment to each U.S. citizen could drive demand, mirroring the price surge seen during COVID stimulus checks. More crucially, the Federal Open Market Committee (FOMC) meeting on December 10 will determine whether interest rates are cut. A rate cut, as seen in September before the previous record highs, could reignite investor interest in high-risk assets like Bitcoin. Macroeconomic headwinds and liquidity concerns. Despite the potential for recovery, macroeconomic headwinds and liquidity concerns continue to weigh on the market. Nick Puckrin, a crypto analyst at the Coin Bureau, notes that crypto and tech stocks are diverging, suggesting that Bitcoin is more sensitive to broader economic factors. The upcoming FOMC decision will be a critical test. Conclusion: the recent Bitcoin price crash underscores the inherent volatility of the cryptocurrency market. While potential catalysts for recovery exist, including government stimulus and interest rate cuts, broader macroeconomic conditions remain a significant risk. Investors should approach the market with caution, recognizing that historical patterns suggest further corrections are possible.